From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Welcome to the COB. Great to be here with you on the 17th of July.
On a day where, again, we hit intraday records. I was talking to Graham from the ASX earlier about an interview we're doing for The Wealthy, and I said, do you guys crack out the champagne and the streamers? And he said, look, we might be a little bit under the weather if we did that, considering we're hitting records so many times.
Yeah, right. I saw a really interesting note, Juliet, from UBS earlier today, just saying, okay, now we're above this 8,000 level. What are some of the key considerations? But UBS, it had an $8,000 target on the market prior to us hitting these record highs. So yeah, just interesting to see that they still see, this is not bullish. They say it's not a bubbles type thing. They are really sticking by their expectations for good performance.
And forecasters kind of, I guess, scrambling to update their year-end forecast, given that so many we've already blown past what many thought that we would reach by the end of 2024, let alone the middle of July. All right, so talking about how the market is tracking, let's have a look at where the CBO 200 is. Up 0.7%, and the ASX 200, as we mentioned during the intraday session, hit a record.
Yeah, okay, so we'll keep an eye on the S&P ASX 200. We'll update you on where it rests once the last of the day's trades go through. But yeah, keeping an eye on this record rally. I was a bit fumbly there, but UBS is sticking with its 8,000 target by the end of the year. It's really looking what happens in reporting season. Don't forget, August is knocking at our doors. And Juliet, it's like we coordinated our outfits with the gold price.
Absolutely. We just had it in our bones that we knew, well, we did wake up and know that gold had hit a record. But certainly that did impact and affect a lot of the gold players on our market, seeing some good gains coming through there. And also just a little bit of a read, we were talking about consumer confidence yesterday, but a read on the luxury goods retailers as well. Because if we're not spending on discretionary items, are we spending on luxury goods? Cettire coming through with that confirmation after, of course, it had a profit warning a month ago, which saw 50% white from its share price. Yeah,
so it looks as if the second half has been more positive for Cettire, but I don't know if you'd go ringing any bells or cracking any champagne over that one.
No, but I was interested to find out that their customer base has grown almost 64%. And if people are on that site, remembering it is luxury goods, the average checkout cost is $800.
Okay, well, I did read a note from RBC Capital Markets on that. It is sector perform on the company with a price target of $1.40. Shall we rip through some of these sectors?
Look at the gold players kicking it off with our yellow. Newmont there up by 1.6%. Regis looks pretty good. De Grey unchanged. But yeah, a really good day for the gold players.
Yeah, not so for the yellow cake. Oh my gosh, we've got a theme here. Look at these uranium miners coming under a lot of pressure. Boss Energy down by 2.5%. Deep yellow, amongst the worst performers on the 200. But tech, totally different story.
Yeah, absolutely. So anything interest rate sensitive, having a good session. WiseTech up by 3.3%, Xero pretty unchanged, but Technology One up 0.1%. A lot of those real estate trusts looked good today as well.
Yeah, so look at the banks, and I was just reading a note from our friend Martin Wetton at Westpac. So we had inflation data in New Zealand coming in below expectations. I think the rate was 3.3%. He's now changed his call for Westpac to see an interest rate cut coming from the RBNZ in November, so changing that call to a cut.
All right, let's have a quick look again at some of the top stories. Of course, we had an update from BHP. Iron ore was another record. Shares though under pressure, not worth noting I should say, that we did see weakness in base metals, particularly copper and aluminium overnight.
Yeah, there's Cettire, so clearly, market's not buying. It's glossy release today. And you've got Star Entertainment. I mean, I guess you could say it's a positive. It's up by 2%, turning on its machines once again after they were shut down on the weekend.
We're also keeping an eye on Zip. Now, it did go into a trading halt, and this, of course, coming through from the AFR reporting that it's in a $267 million raise to pay down debt. But look at that, how that's performed over the year, up more than 270%.
Yeah, we've had a number of analysts on the call joining us and saying that Zip was looking really interesting. So we'll keep an eye on that one. Maybe we'll ask our first guest about that one. Mark Gardner from MPC Markets is here with us in studio.
Good afternoon.
Welcome. Were you one of those that were on the zip bandwagon?
No. Thankfully, we managed, if you widen the chart out, I managed
Yeah.
to, we got some people out at $4 on the way down.
Ooh.
And we haven't really revisited it since. There's been obviously a lot of temptation to buy it on the way down. But yeah, the buy now, pay later for us, so we just, it was, there probably wasn't a lot of risk in it down at those lows, and I'm not surprised it's jumped 270 odd %. But yeah, you widen that chart out for any more than a couple of years, and it's probably pretty ugly. So yeah, we're not in the game of trying to pick bottoms on those, because we probably would have gone a little bit too early. So
What about BHP then? A good update there?
yeah, it was a really good update for BHP, expanding their copper production as well, which is. We've had Chinese smelters, again, downgrade. They can't source ore. So the moves in the copper price have been pretty odd recently, considering you've got the smelters really, really finding it difficult and having to reduce capacity, which means end production of copper is going to be, is going to see price hikes at some stage. And obviously, Rio's been going quite well recently, just on the back of they've got that higher copper element as well. So, but it was a solid, quality update really from both of them overall. Materials just seem to be a little bit out of favour at the moment.
Do you have a preferred pick? I was talking earlier to James Garish from Shaw and Partners. They favour BHP over Rio.
Yeah, absolutely. And there'll be periods where, I think it was about 18 months ago, Rio really lagged and BHP was up around that $50 region. So there are times where one is a lot cheaper than the other. At the moment, BHP, I think, is the really cheap one. And from a long-term perspective as well, they've got the potash project coming up in a couple of years. They sit on the biggest known deposit of uranium in the world. They can go into production basically at any time. And I really like the copper angle as well. So, it's not. They're moving away from just being pure iron ore play, but obviously they've still hit all their marks this year. As you know, that's what you want with BHP, and particularly they're very reliable, and they always hit their marks. So I think we'll quite easily see. We'll see a bit of a rebalance over earnings season. I think where the banks will probably come a cropper a little bit, and I think we'll start to see people hunt for dividends in the materials sector. So I think that where the index is sort of irrelevant. I think one will rally, the other will fall away.
We've got the cyclical nature of the Australian share market, and if we get rate cuts coming through, which seem to be firming up at least expectations in the States, and I did mention the RBNZ as well, then potentially we could see more of a movement globally into some of these cyclical stocks.
Yeah.
A lot hangs on the Aussie employment data tomorrow, doesn't it?
Yeah, so we're expecting 20,000. I would say the Fed, I think they're now pricing at 100% chance of September. I mean, mind you, we've had a lot of 100% chances of getting a rate cut this year that haven't materialised, but this one is looking more and more likely. I think that just gives the RBA a little bit of breathing space just to stay on hold. Don't expect a hike here, and it would be we'd really need some solid data and some solid inflation prints to the upside for them to hike, because it's just not. To have to go and hike by 25 or 50 and then reverse it very quickly, I think it's a bit of mud on their face. So I think they'll probably just try to use the Fed, the Fed and the ECB's outlook to sit on their hands.
Well, July 31st is really looming large in everybody's calendar for that monthly inflation read.
Yeah, indeed. Let's talk about the US, because a little bit of data out there tonight, but some big guns with the earnings as well. You've got J&J, you've got Alcoa. What are you looking out for? Yeah,
we had United Health last night rally about 6 or 7%, which is one of the big Dow components, which is why the Dow hit a new record last night. J&J, look, the healthcare sector, I think, it's probably been a little bit undervalued. I think we've got Netflix on Thursday as
Netflix
well.
Will be good.
So we're starting to get in the swing of things. I think the banker, you can see in Macquarie, we're a touch concerned that the banks may underperform in the US. So we took profit in Macquarie at 205, which is turning out to be not the best decision at this stage. But we're starting to see that uplift. I think it's the US banks are far more relevant to Macquarie than they are to the big four. So we might see Macquarie continue to rally on the back of those decent earnings. I think Bank of America was up about 6% or something as well last night. So Yeah, well, it'll be interesting to see. But so far, it's gone really well over there, and we'll see what happens with the rest of the market.
So, gold. Now, you know that Mark used to not like gold at all, and then he started to change his view a little bit. Gold at all-time highs.
Yeah, so the store of value trade.
Yeah.
I don't like to call it the gold trade. But bit the bullet, obviously, we bought Newmont, which has got copper exposure in it as well. We still have our silver, which has outperformed.
Industrial applications, this we
Correct.
know.
So, but overall, that obviously easing cycles really help the store of value trade, and obviously which is gold for the gold bugs. But the gold miners have actually were at a significant discount to where the gold price was historically as well. So, I mean, where we bought Newmont, it was less. I think it was less than 3 months ago. It's already gone 25%. Where you said the likes of Northern Star was already around these levels. So there was some value there, and it is the only listed gold stock in the S&P 500. So it will. I think as it gathers more attention, you'll probably see Newmont maybe traded at a little bit more of a premium rather than a discount as it starts to attract some money in the US because it's really their only option. Whereas we're sport for choice here in Australia.
Yeah.
But yeah, we'd probably just see. We'll see that trade continue. And it's not the worst thing in the world to have on in terms of that US debt is it's spiralling out of control. Trump's now largely a certainty. Fellow who's filed for Chapter 11 about a dozen times. I don't think there's going to be too much fiscal responsibility going on there. So I can't see that debt problem being fixed anytime soon. They'll have debt ceiling talks again, I think, towards the end of this year. So that put no one's. You basically your only choice is to really pull back into those store of value trades, which is and we might see just general commodities start to shift higher with lower rates and people going back to real or hard assets rather than the pie in the sky valuations that are going on with some of the
So
mega
let's
caps.
talk the great rotation. I mean, obviously tech to industrials in the US. What do you see in terms of also the small cap rotation? What do you like in the Australian small cap space?
Yeah, in terms of the industrials, obviously it's getting, they get hit quite hard on speculation of recession. So they're almost priced already there. And when we started pricing these Goldilocks situations, there's value there. So IPD Group's a good small cap we really like, and Mars Group as well, both in that industrial space. Both have a really solid track record of outperforming at earnings, and they've been going largely sideways. So I think IPD Group plays into that thematic where they're heavily involved in data centres and the electrical engineering and the rollout. Mars Group as well, energy transition is part of their portfolio and infrastructure as well. So they're and they're still largely founder led, particularly in the case of Mars Group. So I think you'll see them beat expectations over earnings season because those contracts haven't gone away, and you start to see some really significant upside. IPD Groups was only listed in 2020. I think it's compounding 37% a year at the moment. So but the last 18 months has been very sideways. So they're and they confirmed guidance a couple of weeks ago, so we'd expect some decent run-ups there. But there is plenty in that small cap space at the moment. So you just got to be, you got to dig down and do your research. Maybe watch the Friday episode of The Call with Luke Winchester.
Yeah, possibly, or my last hour here from 3 to 4 with really? Small cap heaven. Yeah.
There you go.
All right. Well, thanks for sharing a couple stock picks with us
worries.
as well, Mark, on this Wednesday afternoon. Nice to see you.
Cheers.
All right, Mark Gardner from MPC Markets. Now, we had an interesting stock of the day. I think it was Arcadium Lithium. Henry Jennings and Michael Wayne seeming unimpressed by Citi's suggestion that Rio should consider acquiring the company amid low lithium prices. Let's hear what they had to say.
Suggestion.
I think it's crap, to be honest.
Right.
I don't think Rio...
So that's a technical term?
It is a financial technical
Right,
term.
okay.
I can't see Rio really doing this. I mean, they've just spent a huge amount of time getting the JADAR thing back on the agenda with the Serbian government. The Serbian government's given them all the clearances, subject to a bit of environmental issues. So that would be a big foothold for Rio and for Serbia with the European market in terms of lithium production. It's quite a big asset as well.
It is possible that as the prices remain low and remain low for a while, that there are acquisition targets that do emerge. Arcadium has really only just come together itself, and they're still trying to really nut out that merger. It is one that we did hold at some point. It was one of the worst or the worst performer in our fund and model portfolios. We did sell it and it's continued to bomb, but we do hold other lithium. We do hold MinRes. It's got some exposure to lithium, obviously, or growing exposure to lithium.
All right, so that was the stock of the day, Arcadium Lithium. Juliet, I've had a few viewers say, why is it not in the podcast any longer? Podcast being the Call podcast. Well, you can find all those stock of the days on our website. Just go up to the top where it says series and you can click there, and we update it daily still, just for those of you not in the know.
All right, let's have a look at the after close leaders and laggards, kicking it off with Polynovo, which had a good day, up by more than 9%. James Hardy, we're talking about a bit of a switch into some of those industrials, Credit Corp, Neuron Pharmaceuticals, and Reece up there as well.
Yeah, I thought it was worthwhile to mention Iris as well. IRE is the ticker code. Its share price is up by about 5%. There is further speculation that it may be subject to a private equity bid. That's according to sources, speaking with Bridget Carter over at the Oz. Laggards today. We talked about the uranium thematic. Nanosonics giving back some of its recent gains. Illumina, well, it's interesting. We've got Alcoa reporting tonight, you said, and Illumina, obviously, it's taking over Illumina. And then you've got Iluka Resources there down at the bottom.
All right, having a look at the small end of town. Titomic had a good day, up by almost 26%. Step One as well, also an update out today, sending its share price up 24%.
Yeah, trade going really well for that company. We had them on about a month ago, I'd say. It's Undies.
Bamboo Undies.
Yeah. And so, yeah, they're doing really well, knocking it out of the ballpark, you could say. On the flip side, though, let's see if I can recognize any of these from the previous program. We spoke with Emmanuel Dat from Dat Capital. He gave a couple of picks in the small cap space. And I spoke with, a bunch of small cap CEOs, none of which are on this list. But some bad news had to come out from Theta Gold Mines for it to not do well on a day like today.
Yeah, indeed. All right, so kicking it off with what happens tonight. And this is my fault because I did this. I forgot to write Alcoa and J&J on this, but some of the other companies that are up there, United Airlines, ASML, US Bancorp, and then of course we've got industrial production that Mark was talking about, housing starts, and the Fed's beige book coming out as well.
Oh, that'll be interesting to get a perspective on how the different states are performing in particular, so always keeping an eye out for that one. And just looking at Westpac's note on that, saying that it will look to see what's going on. Oh, forget it. I think that's an old one. Oh no, it says that it will provide an update on economic conditions and that the FOMC's Barkin will speak as well.
All right, so tomorrow, of course, the big one, unemployment data, 20,000, Mark was saying. I mean, it's almost a bit like throwing a dart at a dartboard, that series, but of course it does move markets and the currencies. So we will have Phil O'Donoghue, actually, from Deutsche Bank, talking to us about that at 11:40 tomorrow. Also in Japan, June trade balance coming through, and a couple more quarterlies, including Evolution Mining and Santos.
Yeah, it'll be interesting to see what Evolution says when it comes to costs, but also the copper part of the business. It's got that dual exposure there. Let's find out where the S&P ASX 200 has closed. So off the highs of the session, Juliet, but still really solid result coming through for the S&P.
8,065 points. I mean, whatever way you want to dice it, we may be off the intraday high, but we've never seen the index close at that level. 0.7% on the CBO 200, so a very good session. And of course, as we know, all our interviews are up on ausbiz.com.au, but I had a great chat with Marcus Padley from Marcus Today earlier today, asking him about this rally that we're seeing in markets, and he was saying, look, just because a market hits a record doesn't mean that you get nervous and sell. He was saying don't sell unless you see a big bad down day on Wall Street. So that is coming from Marcus Padley, not me, but an interesting take as we continue to hit these records.
Yeah, US E-minis are lower, but it doesn't look like it's indicating a big bad down day in New York. Of course, the quarterlies will dictate some of trade there. And I'm just noting that UK, it had an inflation readout today as well, rising 2% on year. So it's actually a little bit higher than what we had been expecting. I think the market had been expecting a lift of about 1.9%, but still 2% inflation coming through in the UK.
All right, all about jobs tomorrow. We will keep you updated on all of that. We'll see you at 9:40 Eastern tomorrow.